Hello, welcome to this video by Indicator Vault. My name is Ronald, and in this video we're going to go over the precision strength meter. You can see it up here as kind of this mini dashboard that displays on your chart, and we'll just briefly go over the settings. Obviously you can change these, but so strong font color white, strong background color red, and so we see that here with the Swiss franc, red with the white font. Rising font color black, rising background orange. We can see that with Canadian dollar, pound, and US dollar here. These are essentially the currencies that are gaining strength. They're gaining some momentum. And then neutral font color black, neutral yellow. We see that here with the yen and Australian dollar. Background color is yellow. And then the weak font color white with the weak background color blue. We see that with the New Zealand dollar and the euro. And again, these are the default settings. You can change these however you would like. Let's get into it. So you can see here I've got the New Zealand dollar Swiss franc chart, and I've pulled that up because we've got currently the strongest and the weakest one here, and we can see obviously today with the hourly chart a strong down move. And so one way to use this is, keeping track of these numbers, and it's on a scale of 1 to 10, by the way, 10 being the highest. If this continues bearishness, well, we know price is going to retrace and needs to have a retracement. And so this will help us gauge if that trend is going to continue. So for instance, you can mark out sort of this supply zone, or even, just this big one here, even mark that out. As price is retracing back up into this area, into a zone that we think could continue to push price, well, as it does, if we see that the New Zealand dollar is still weak, if it's still got a background of blue, with the Swiss franc being stronger, then we could reasonably expect that price is going to push this to the downside as it gets back up here, and that this supply range is going to hold. And so it's a way of kind of gauging, if a trend is going to continue. And the numbers may not be exactly 7.3 or 1 when price retraces back up in here. They may be a little bit closer together. Maybe this will just be 6.8, and this one may be 2 point something. But that would still tell us, okay, the New Zealand dollar is weak. It should continue making new lower lows. So let's go into another example of one that's basically similar. So we've got the British pound to the Canadian dollar, and we see here 5.0, 5.3. And so both of these with the orange background are seemingly gaining momentum. So this can be used to filter out basically low probability trades. So for instance, as we see price coming up into this zone, this sort of supply zone that broke these lows, obviously price action and market structure could tell us that we could, still continue to see a downside. However, with this other supply zone, up here that has still actually been untouched, we can also reasonably expect it may want to come up here as well. And so one way to find out is with this, currency strength meter, and it's basically telling us stay out of this trade for now, or stay out of the market for the pound and Canadian dollar. It's, it's saying either one of these is going to be low probability at the moment. If you want to get in a trade now, we could still reasonably expect it to pop up here. And even more so, it may just even consolidate for a while. And so it's not saying there's going to be any breakout, any strong directional move. You can see even the overall trend, while we've had a big strong down move here, it's right in the equilibrium area of this range. It's just hovering in the premium area. And so we can see a lot of consolidation for the time being. But let's say, hypothetically, if it does break through this supply and reaches into here, while, the Canadian dollar is going up to, in the 7 point something or 8 point something, if that's gaining strength up here in the meter, then it would probably be a high probability trade that this supply range should hold. And so that's one way we can use the precision strength meter, is to filter out the strong impulse market moves. Right now, there's nothing telling us that this is going to show any strong move to the downside or even the upside, because as we've seen, this high has been broken by this low. And so we could even see price just continue higher. We'll just have to wait and see. Like unlike our other example, where we've got an extremely weak pair paired with a very strong pair, if that remains the same, we could reasonably expect this supply zone to hold. So let's go into another example with the euro Swiss franc. And so this is also just telling us, seeing that the franc is so much stronger than the others and the euro and New Zealand dollar so much weaker, it helps narrow down the exact pairs we want to trade with the trend. And as we can see here on the 4-hour chart, this has been the exact thing for quite a while now, this big downtrend move where the franc has been so much stronger than the euro. And so the same thing that we just saw with the New Zealand dollar pair, we could apply to here. And also, if you change time frames, it doesn't change this. It's based on some, not the time frame you're on. And so the numbers aren't going to change depending on the time frame that you're looking at. And so from here, maybe if this weakness with the euro continues, this supply could even hold. Of course, we have some gaps here between here and this one here that could hold price as well. But it's very reasonable to expect, if we start to see a retracement up, that it's got a lot of work to do in order to start breaking these highs. And if it were, we'd start to see these numbers changing. So our supply zones could start becoming more of demand areas to look for, right? So let's say we have this area marked out where we could see price retrace back into. But as it's doing so, these start to become more even. Euro maybe starts to go to about 5.3 or 4, and this is cooling off to about the same. Well, we would probably sit on our hands. But let's say price then actually has a strong break above it and creates a new demand zone here. Well, as that does it, let's say we see these numbers are reversed now. Euro has now jumped up to almost 8, where the Swiss franc has dipped, below 5 and is now in the yellow zone of neutral. Well, then we would probably expect price to retrace back down and continue up and not respect this supply over here. Because we've still got this zone that's not touched yet. But if the strength meter is telling us that, the tables have turned with these two, then we probably would expect that this supply to eventually get broken and that new demand formed somewhere here would overpower the supply and continue upwards. So that's a precision strength meter, and just, some tips and tricks of how to use it along with, your other trading strategies and styles. So I hope this helped, and until next time, best of luck trading.